The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to triskaidekaphobia. The first person that tells me what that is wins a $5. Too late. It's the fear of the number 13. In China, that happens to be a lucky number. Those of you that ride elevators and notice that there is no 13th floor in the elevator, that's because they use that for storage. So just remember that when you're on the elevator. Okay, very good, but you're close. Unfortunately, you were surpassed by someone in Macedonia had called in earlier with the answer. Folks, we're going to change the protocol here a little bit because I didn't get my DAX chart from across the pond like I usually get in the morning. So we're going to start out with the Treasury bonds. If you'll notice here, when we made that extension down there, when we had the 3-drive pattern, you'll see that the 151 level was very, very important because of that 1.618 expansion, 3-drive to a bottom. That led to this pattern that we're looking at now that we discussed here in the den on Monday and Tuesday, that we had a really strong possibility to get up to this 153.24 level. And of course, with the news today, there you go. You're up to there, this level. Now, you had this really strong move this morning, so it's probably best to wait an hour or so to make sure this level holds if you wanted to go short. The market is certainly in a downtrend. This is a Gartley pattern. It is spot on Gartley, A, B, C, D. So it may fail, but this is what it says that it's going on. So we'll pay close attention to these bonds because this will be affected by the currencies and everything else for sure. Now, we've had a question from one of our listeners about the silver, because we've been talking about silver for quite a while. One of the things that we were talking about, if you remember, was to watch the silver action. And it's the same thing in gold. I'll show you the chart in gold because it's no different. Well, different prices. But you'll notice here, after we had the 3-drive pattern that was exactly at the 61% retracement on the weekly charts at 1635, we had a really strong move that exploded to the upside. We went sideways for one day, then we broke out to the upside, and then we pulled back, and you'll notice that pullback stopped exactly at the 50% retracement level. And what I'm going to try to do is to build a case for pattern recognition, actually, so that you'll get a better idea of some of the things, that we're really trying to see here, because we're not looking at the fundamentals. We're just looking at the reaction of how the people buy and sell this stuff. So let's just see where we are this morning with silver, because it's very interesting. Same thing in gold too, and you can actually predict some of these things yourself, folks, because nothing really changes. There's where we are. You'll see we made the bottom. You see we had these 2 areas of consolidation that stayed there for quite some time, making the 3rd area there. Then we made a 78% retracement over the previous day. That's very important between the 11th and 12th. And here again, 12th to the 13th, what did we do? We made another 78% retracement. And from that level, the report came out, and now we moved to the upside, and we're going to be running into a tiny bit of resistance at 17.40 per ounce. And I believe that the key word there is tiny bit, because I still think we're going to go a great deal higher in gold and silver. And it's really amazing. What's really strange is the fact that you have news that is usually very negative to silver and gold, and that is low inflation, because silver and gold, that's the man who owns the gold makes the rules. That usually means that gold and silver should back off. That's old days when we had money supply and stuff like that. So we'll see if that is going to be the same thing going forward. But don't forget, we have quantitative easing now, and that is a totally different game from what they're telling us with bonds and everything else. They're just moving money around, any way that they want to. We've had this big breakout, of course, in the XAU, which is giving us a tip-off to that, but the gold and silver at those 61% retracements on last Friday, they've certainly followed through this week, and that's what's important. Here is the chart of the gold doing the same thing. Now, this was done before we had the sell-off this morning, and you'll see here, we'll get this up here so you can take a quick look at it. And this was predicted by one of our folks over across the pond and a little north of the pond, but this is a gold chart. And it happens to be a 5-minute chart, so you can see the activity that you get on some of these. And you'll notice that the market backed all the way off down into that 78% retracement, and then of course rallied up and made a new high. So it just repeats itself over and over again, and that's what you're trying to do. Bob, the sound is coming through. Evidently, he's not hearing. Does everybody hear me okay? I guess you would be, or you'd be throwing vegetables. So we'll see what's all right here, but I think we're okay. No guests today because all of my guests are on vacation. Okay, we're a good 10-4 here. We're all right. By the way, folks, I listened. I like to watch the Cubs play because I lived in Chicago when I traded on the floor for those 3 years from '82 through '84, and I was a sort of a Cub fan. I was a White Sox fan when Tommy John played for them back in '64 and '65, '66. But when you watch baseball, folks, most people think that it's very boring, but it's really not. It's a game of statistics, and I watched the game yesterday. The Cubs won 9-8. It was a really thrilling game, but the statistics in the game were really amazing because the manager of the Cubs made a really bad tactical error. He took out a pitcher and brought in a new pitcher, but the new pitcher's statistics against the new batter were very, very poor. I don't know how they ever allowed him to do that, but evidently he thought that was the right thing to do. It turned out to be the wrong thing to do because the batter hit a really strong double and knocked in 2 runs and made the game even closer. But that's all what it's all about. It's about statistics. And since we're talking about that, John Jameson is going to be doing a webinar for TFNN on Monday, the 16th. Folks, if you get a chance to listen to this young man, well, he's not young, he's 53. That's young by my standards, but I've known him for a very long time. He's really good at what he does. He's very entertaining. And if you like the Euro and you like the E-mini S&P, you really need to listen to this. He's going to ask you a question. What would be the probability of winning on a Thursday if the E-mini is down 2 points after the first hour of trading? Would you like to know what the odds are on that? And how would you like to know if the euro is up 15 pips after the first hour of trading? What are the probabilities of it closing higher for the USA session? Would you like to know that? He's got all of this lined up and how he did it and what he does. I mean, it's really lays it out on what the market's actually doing. And believe me, there are patterns there that this old cowboy never even considered. It is really, truly an amazing thing. It'll verify, why harmonic numbers are important, especially in the S&P, 3.5 and 5.5. And now we have to pay a few bills for our good friend, Tom O'Brien and Company, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to talk about currencies here a little bit because it's related to the bonds, because it's money moving. And what I wanted to do was to go over what we looked at in the Canadian dollar. Starting last week and then through the beginning of this week, how the market had finally rolled over and started to change direction. And what I wanted to do was to go forward to what's happening from yesterday into today, because we had the report. And if our theory is correct, we should be able to see, the same types of patterns that got us to the upside would start to take us to the downside. And as you start to look at this Canadian dollar this morning, you'll notice that this morning we completed an ABCD pattern right after the report. It was a perfect ABCD, and the reason why you can prove that is you'll notice it was 0.66 to the downside, 1.44 to the upside. That equals 2. You'll notice that the high the previous day came in at the 78% level. It came at the 61% retracement of the 9th, and it came into the 50% retracement of the 6th. So that was a very, very important number, to be watching. And as you can see, the market broke, well over 60 pips in just a matter of a few minutes, and that sets up another ABCD structure to the downside. Now, the cautionary point here, the caveat emptor, is if you get above this 125.20 level now, this whole scenario would change, and you'd probably have another stronger rally taking you up to 125.70. But unless that happens, this really wide-ranging bar that we had here tells us that the Canadian is beginning to it's actually gaining on the U.S. dollar. So you'll be watching it very, very closely. Of course, it's a very important pattern to be watching for sure. Now, we talked about the euro quite a bit over the weekend. The fact that we had such strong support at that 117 level, and we've had that, and then we've had these minor sell-off of 70 pips yesterday in the euro, and now what we're doing is we're getting ready to. In fact, we backed off just not even to the 382 in the euro during this past little pullback, and that tells us that we're getting ready to most probably head higher in the euro. This is a very interesting week here for some commodities and also, for foreign exchange because we hit such powerful numbers last week, and now we're really reinforcing, that's what made the thing work like this. So we'll see how it follows through next week, but right now it's going pretty good. Now we did have a major grain report yesterday. The supply-demand situation. We were looking, of course, on this wheat. We'll put up the wheat here and see what it's doing. It had a minor move in the wheat, just a few cents, but and the wheat report was slightly negative. They thought they had a little bit too much wheat, but those numbers changed quite a bit, as you can possibly imagine, because it's a world number, and a lot of these countries don't tell you what's really happening. Wow, surprise, surprise. Anyway, let's look here at what happened to the soybeans, because this is the one that we were watching very closely in the newsletter. Let's just bring this up here to show you this. We're into January beans now because Novembers are getting ready, to get into delivery here in another week or two, and 3 weeks. But anyway, you'll notice that the Jan bean stopped right at that rising bottom line. It was a perfect 786 of the previous 3 days range when it hit the 966. I wanted to buy it if it made the ABCD down at 953, but it hit the bottom right there perfectly and then went right up to the exact 61% retracement. Now, the key here is you see, if you look at this really closely, folks, and I think it's important here, if you look at the high on September the 5th, and if you look at the high on September the 22nd, and if you look at the high yesterday, that's a 3-drive pattern. It's perfectly symmetrical. It makes a natural channel line. So until the soybeans in January can get above the 10-12 level, this is going to be strong resistance. All this big bar did was the action that occurred, following the report that happened at 11 o'clock, 10 o'clock Central Time yesterday, 11 o'clock Eastern Time. So that's all you're going to be looking at. So today's action is going to be very, very important, and you're going to have to see what happens on Monday, because if it doesn't start moving to the upside, in other words, follow through after this long-ranging bar, all you've done is completed a Gartley pattern in a bear market, and so you pay very close attention to that, and that's why it's important, to watch what's going on with that, because it'll give you a really good shot. Believe me, the market does. We mentioned here several times it had a bullish bias. It certainly did. I mean, we had the higher bottoms, and the market was a whole lot less volatile, and so this is one of the reasons why we had that bullish bias. So keep in mind when we're watching this that if we get above this 10-12 in January beans, this thing could have legs. And the meal is actually doing a lot better because it went all the way up to the of the group, and it had been the laggers. You remember, watch that carefully. Okay, now let's look. Hold on, we got a question here possibly, and we'll see what's going on here. I don't know why I'm losing the audio. I might be, but 10 sign, boys and girls. Uh-oh, not good, not good. 10-4, 10-4. Let me try something here. Close this window here. Let's try it again. 10-4, 10-4. This is Billy Ray Valentine. I think it's the internet, boys and girls, but I'm not sure. Can you copy that? I think it could be the internet. That helps. What I did is I closed down Ensign. There we go. I closed down Ensign, and I think we're okay now. They didn't want to listen to me there anyway, so sorry about that. It's just when you try to walk and chew gum and do a radio show, it's a really difficult scenario. Okay, what we were saying here in the beans is you've got to have follow through here in the beans, meal, and oil next week. The report's out. It was slightly bullish to the beans. And it was, remember, to death's door, because if you'll remember, well, I think I can bring this up without any trouble at all. Let me just show you where Minneapolis wheat is, because what Minneapolis wheat has done now, it has come down and hold on a second here, boys. Yeah, I don't think we closed right at the 609 level in Minneapolis wheat, and it's pretty good. You're right. When you're working on a laptop, it's not. But I work on a laptop a lot. I got these two 42-inch monitors and a big computer hooked up to it with super video cards. But the darn thing is so bright that it's you have to use a really dark background, because my office is I think it's 12 by 20, but those monitors are so darn big. I mean, they're just too huge. I bought them during a hotel bankruptcy in 2009. I paid $500 for these $3,000 monitors. They're still running strong. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Meal here for a minute, and then we'll get over to the British pound. You notice here we were looking for the meal to hit around 322. When the report came out, it went all the way up to the 78% levels, totally different than what we're seeing in the soybean oil and also the soybean. So this is why it's so important to wait through this week. finish this week's trade Monday, because if it doesn't continue higher on Monday, then you're going to be we'll be watching it. I don't know why it's rough. It's who knows? Maybe it's internet stuff. It could be something that's happening out of Hollywood. With all the things that are going on. Anyway, boy, that's a real surprise that they had a thing called a casting couch. I had never heard anything so absurd. Wow, it's strange how the things work in. Anyway, let's take a look here at some of these things that we're looking at in the market. The British pound, that was one that we were looking for, a really strong rally coming in this week. If you'll give me a second here, I wanted to bring this up to look at you, because we're in the midst of this rally. We're almost right now. And we're going to here again, you're going to be looking at the same type of thing that you're looking at coming in. You want to wait, because we're trading at 133 and change. The number is 134.20, but it's going to get there very, very quickly. It's going to take only 5 days to go from the 61% retracement to the 61% retracement on the upside. It took 2 full weeks to get down there. It only took 5 days to get back up. So that could mean that you're going to go back up there and hit that big 61% retracement level at 138.40. We're going to know that either today or Monday, I would think. So the level of 134.40 is going to be really important, because popping through there, you can see the easy A, B, C, D 3-drive pattern taking you up to the 138.40 level. That would be a level that you'd really want to be watching. That's when we probably hit 26,000 in the Dow on Monday, but we'll have to wait to see if that number comes up. But anyway, that's what's looking at the British pound. It's doing pretty much what we expected it to do. The question someone just asked is about the Treasury bonds are the same as the soybeans and same as the British pound, and just about anything that has these wide range bars, folks, like we've had in the British pound, and also the Treasury bonds today. You have that really wide range. You can't fade that. Let me just show you, folks. That's a full handle, and believe me, this is a big thing. Trades. This is 6 times bigger than the notes. In volatility, the notes are bigger, but you'll notice that we had that really strong range this morning following the report from 152.31 to 153.30. That's $1,000. Go back and look how many times you see something like that. It's very rare. So you want to let that, even though it's a perfect A, B, C, D, as we think it is, and it's right at the 61% retracement, it's right at a 127. You have to respect that wide bar. So you've got to give it a little time. 2 hours, I think, is more than enough for it to dust, because it's a lot of trading between that. So watch it, because it's a thing to pay attention to. Also, the crude oil. We 151.60 level, which is the 61% retracement, and if oil, many interesting week. The bottom came in. We've had a really strong. Probably have to wait till Monday. Understatement of the year. Someone's asked the question, does Treskai decaphobia, the fear of the 13, have anything to do with the markets? No. I have not seen any relationship to that. I do know, because I've listened to John Jameson here, and they want me to switch over to the phone backup now. Let me do that here. And I will, let me do that. I'll just turn this puppy off. Hold on a second here, and we'll let's test this. Ray Valentine calling in, 10-4, 10-4. Wow, this is terrible. Wow. Testing 1, 2, 3. Let's testing, see how we're doing now. Folks, I've got a new Gulfstream 8, and sometimes these new planes, when you get them, they have a lot of technical difficulties. So, it's difficult to get this on. Yeah, Gulfstream 8. I saw one once in a picture. Anyway, I even forgot what we were talking about. I got so confused with all this technical stuff. We were talking about, someone want to remind me? Oh, well, not to worry. Let's just move on to something. Yeah, crude oil. Yes, crude oil is right at the 61% retracement. Gold has gotten above 1,300. That's very bullish. Folks, if we get a break in gold, just figure $17 if you're looking for a break in gold. I'd watch $17 an ounce. That's 1/2 of the harmonic number. It'll probably come in at a 382. Let's do this together. We went from 1262 to 03. Let's call that 04. So we rallied $40. So if we get a break of around $14, that's going to be a 382 retracement, and that's where I'd be looking at it. So if you get gold down to that 1280 level, I think you got to just say, let's give it a shot here with about an $8 stop, because it's got a really bullish bias. It's really and silver is too, but the gold is even more so. That 618 on the weekly is for real, because we've been up every day this week, no corrections. That's really telling you this market has legs to go higher. So watch for a nice ABCD to the downside, to take a look at it, for buying purposes, because it certainly has legs if it wants to do that. The other market, we talked about the grains. You must wait until Monday. Today could be the tip-off, and maybe it blasts through on all these numbers today, because everything else is, moving around quite a bit. But the really safe trade, and sometimes safety is better, is to wait until Monday to see how it's going. I'm in contact with Cy Monley several times a day, and one of the most difficult times I have is when the market does something like this. The emotionalism behind the news carries away.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we want to talk just a little bit about the cows. We've had a request from someone. I put the chart in that we talked about on Monday. These cattle went right up to 119.10, the exact number of the ABCD pattern, 3 times, and now they've sold off about 2 cents from that level, but I'm not sure, whether that's going to be the top or not. But if you get above 119, this pattern is probably wrong after the sharp break that we had over the past couple of days. The hog market looks pretty much similar to the beef market, but it is a lot less strong, of course. And as Rich Anderson said when we had him on yesterday, is that there's a lot of extra protein around, so it's going to be interesting, what happens. But the pattern says we should be heading lower in the cattle. Whether we do or not, we'll have to, wait and see what's going on. Now, I posted the chart in there of the shorter-term swings in the gold market. As you can see, we hit several big numbers up here today at this 1303 level. So don't be surprised if there's some type of a correction in gold, because you have a 78% retracement of the high we made just a few days ago, and then you also have a really nice ABCD structure coming into it. As you can see, that small butterfly pattern that is there too. So that's one that you want to pay particular attention to, because it could certainly make a case for a little correction in the gold. And I'm thinking $20, well, somewhere between 13. So far, our corrections have only been about 7, so you double that, it'd be around 13 to $17 is what I'd be looking for in the gold market for a correction, because you've got to respect that long-term weekly number in gold. It is just, it's really screaming at it. And it's verified by the silver market, too. The silver market did exactly the same thing that we had in the gold market, and that's why you're looking at something that could be, really, really substantial. So that's primarily what we're watching here, and we'll see that. Anyway, we'll get a chance to buy it. They don't run away forever. Yeah, well, they do, but not all the time. So we'll watch it very good. Someone's asked a question about my political agenda. Folks, I tell you what, I get actually ill when I watch the political stuff, and I don't care what party you are. It doesn't make any sense. I mean, these people that are running these networks, they know how to pull people in to watch the stuff, and I just won't do it. It's just, most of it is all BS anyway, and I don't want to listen to it, so I try not to. So don't ask me about that. I know much about politics as I do fundamentals. End of story. That's the bottom line, and I've been doing this for a long time, so I don't have to really pay attention to it, because the technicals tell me who's buying and who's selling, and that's all you really need to know, and that's really what we're watching here. So pay attention to that, and I think you'll be in good shape. Remaining the currencies, we've had a nice pullback in the euro, about 70 pips. We're rallying back strong. So this is also telling us that this market, wants to go higher. That was another reason to think that gold was going to go higher, because gold and the euro have been running together for well over a month now, just about hand in hand. Why that is all of a sudden, I'm not sure, because overall the correlation is pretty good, around 70%, but lately it's been a great deal higher. So I'm not sure was that
Terry, you've got a good sense of humor, my friend, but there's only one person in here. Is the little dudette from Upper East Side would probably have to answer that. But no, those people are sick. I mean, they do stuff like that. But you know, what do you think? Let's talk about the markets. I don't want to talk about that stuff that's on the TV because it's stuff that people they pull you in for the advertising and stuff. I don't know if you noticed this or not, but I saw a thing on Bloomberg the other day that the advertising, they've increased the cost of it for the major networks, and they're giving more of it. You used to be 3 minutes, now it's up to 3 minutes and 30 seconds. You know, that's a lot of money. It's like buying a Super Bowl ad, for heaven's sake. Okay, let's move on to the next one. We'll see what's going to happen next. Anyway, let's hope your teams win in the National Championship Series, whatever it is. This is our fun time of the year for my two daughters and I, because they still follow Dodger baseball, not like they did when they were kids, because we used to travel with the Dodgers, folks. We used to go to San Francisco and San Diego when we'd have breakfast with them before they went out to go to the park and stuff, and we knew the players by name. Even when we were, one of the most fun things we ever did is when we were in San Diego, and down to see the Dodgers, and the Reds, the Cincinnati Reds, were coming in as they were leaving, and we got to meet Pete Rose and Davey Concepcion and Johnny Bench, and it's really great. And now Paula Douglas, Mark's wife, happens to be a friend of Johnny Bench. She's helping him sell some valuable antiques over in the Palm Springs area, but it's really fun. You know, I never got to meet the Duke. I would have loved to have met Duke Snyder, but that was before my time. I was only a little shaver when those guys were playing, but I met Koufax and I met Drysdale, and one of my good buddies was the first baseman, Wesley Parker, who I still talk to, and Wes was a 6-time Golden Glove champion with them and won the World Series in 1965. A real super nice guy. Anyway, and Tommy John's still alive and well, too, living out there in South Carolina. All right, let's go on with the markets. Enough of that stuff. But I do like the baseball season, especially the championship series. That's about the only time I really watch it. And so anyway, on to the next. And I don't bet on any events, folks. I don't gamble at all. That's the same. I don't do anything like that. I play the ponies once in a while and a little bit of the poker, which I really enjoy. Okay, let's move on here to where we are. Oh, my goodness, we're coming up to I still have to believe this is what's happening. Give me a second here to get this Dow chart up. I think it's off by about 10 days, but I still think you got to believe in this little puppy here. We made new highs and all these things, but the way it's making new highs is not impressive because, it's just, they should go up and just blast through all these things. And we've been in the same level here in the S&P for 10 days, so we've been here from 25.50 to 25.56 or whatever the high was. I mean, that's not a bull market. And if you look at the new highs and new lows that Arch Crawford has shared with us, that thing is not telling you that it's that bullish, but it keeps going up. So we'll wait till Monday to see what happens, and then we'll see what's going to I can tell you a story, Bill, about the Dodgers moving to Los Angeles, but it takes too long. But we got to know Vin Scully, and of course he came with the Dodgers and into Los Angeles, and it was he's just a great guy. It's hated to see him retire. Greatest announcer ever. Anyway, let's move. The Facebook, yes, making new highs. Some of these others are too, but others I think we're still in an area where they're going to have some problems. But we'll have to wait and see as we move through today. Let's take a quick look at one of the stocks that we're following really closely, and that is the old Apple, and we'll see how it's coming today. And we'll see here. Nope, it's still in the downtrend. So we'll take a break here. We'll be right back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the crude oil market for one of our listeners. I had a question. As you can see here, since September, we had 3 ABCD patterns that completed up there at that 52.80. We backed off to the 61% retracement of the low of September the 8th, and then over the last 10 trading days, all we've done basically, let's say that the last 7 trading days, is to hit a 61% retracement, and then the 707. Basically, it's the same price. You're only talking about a difference of 20 cents. We're trading a little bit below that right now, so that's why that is important. Because if this fails, you're looking at a move that could take the crude oil back down to 47.40, where you'd have another ABCD forming. However, if we get above the 52.20, about $1 a barrel from where we are now, then you'd be able to take a look at it. But you have to ask yourself the question, with these other commodities doing so well, why is crude oil lagging so badly? I mean, we've had a big move in gold, we've had a big move in bonds, a big move in some of the grains. So I would be very, very skeptical of this because we haven't done that. So anyway, that's my 2 cents worth in the crude oil. I believe it still has a chance, to make that level, but not probably until we get another type of a back off is what I would be watching for. So that's what I'm looking at. As far as the stock market, it's a Friday and an up week. It's going to be pretty difficult for it to be down today, but that's what happened yesterday, so we'll wait and see what's going on. And remember, if you get a chance, try to listen to John and Jameson's webinar Monday, go to TFNN on the front page there. It's a no-brainer, folks. You are flat going to love it. I can actually promise you that. You're really going to enjoy it. He's very entertaining, and the stuff that he has, you'll be able to make money with it. I've listened to it 3 times, and every time I've listened to it, I've learned something new. So you're going to like it a lot. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.